Like any other investment asset, real estate is typically divided into categories and subcategories. The two most significant ones are residential and commercial real estate. Residential real estate includes apartments, houses, townhouses, and any other spaces designed for people to live in permanently or temporarily. Investments in this category of properties are considered more straightforward and understandable, which has made them popular among individual investors. Additionally, residential real estate is usually widely available in the market, allowing investors to choose from a large number of properties and quickly find optimal deals. Another advantage of residential real estate is its versatility. For example, it can be rented for short periods, such as daily or monthly, thereby increasing profitability. This approach is especially relevant when dealing with resort properties, which typically generate higher profits. However, managing properties in this category requires active involvement. Nevertheless, if an investor prefers not to spend time on tenant communication and resolving domestic issues, they can entrust the management of their property to a company that will handle the entire process in exchange for a share of the income. In some cases, third-party management can not only free up an investor's time, but also enhance the profitability of the property through more professional management. However, in many instances, real estate yields lower returns, especially during favorable business times, when entrepreneurs are more willing to pay for rent. The second category, commercial real estate, encompasses all buildings and spaces for business, including industrial, warehouse, retail, office, as well as those intended for public dining. The main advantage of commercial real estate is its higher profitability. Although the difference in profitability between residential and commercial properties may be only a few percentage points, in the long run, this difference will significantly impact the investor's capital growth. Another advantage of this category of properties is stability. Companies typically aren't interested in regularly moving from one location to another, so they often enter into long-term contracts that can last for several years. However, the commercial real estate market is less saturated and doesn't offer as extensive of a selection as residential properties. Often the search for a lucrative purchase can take weeks or even months. The same applies to finding tenants. As there are significantly fewer in the commercial real estate sector compared to the residential segment. In the end, good commercial spaces and buildings are often more expensive than residential real estate. This means that the future owner will need to invest a substantial amount upfront to acquire them. For many investors, this can be a significant obstacle. Either way, when comparing residential and commercial real estate, it is possible to determine a clear favorite. Both categories have their advantages and disadvantages. Therefore, if an investor doesn't prioritize properties from a specific category, it makes sense to consider both segments of the market. This will expand the choices among the offerings and help find the most optimal asset. In this module, we discussed the types of real estate and compared the residential and commercial segments of this market. In the next module, we'll explore the primary real estate investment strategies.